Right. So we are discussing the particulars in the form 3CD, right? We have seen from clause 1 to clause 21. What is clause 1? Name of the assessee. 2, address. 3, the PAN or the Aadhaar. 4, indirect tax and the registration number. 5, status, right? 6 and 7, previous year, assessment year. 8, the relevant clause of 44AB under which the tax audit is being conducted. And 8A, whether the assessee has opted for the taxation scheme under the 115. Okay. 9, partners and their profit sharing ratio. 10, business or profession. 11, books of account. 12, presumptive taxation. 13, method of accounting. 14, method of valuation of the closing stock. 15, whether any capital asset has been converted into the stock in trade. 16, less income, amounts not credited to P&L. 17, land or building has been sold at less than government valuation. 18, depreciation. 19, weighted deductions. 20, amount paid to employee as the bonus or commission which was payable as the profit or dividend, and the employee contribution to the various funds. And then 21 is regarding the amounts debited to P&L or payments without deducting the TDS or payments in excess of the 10,000 being made by other than account pay check or the account pay draft, right? So have we already completed discussing till here? And then on the way we also completed some other ones, like we completed 35 quantitative details in case of the trading concern and in case of the manufacturing concern. Then we've also completed with 37, 38 and 39 and a cost audit, excise audit and the service tax audit. Then we also completed with 41 demand raised or refund issued under any tax laws other than the Income Tax Act or the Wealth Tax Act. And then also 44 breakup of the total expenditure for entities which are registered under the GST and for entities which are not registered under the GST. Is it clear to everyone? Right. So these are the clauses which we have covered so far. Right. So now let's complete our series from 21 to 30, then 31 to 40, and then in 44, 41 to 44, 41, 44 already done. Only the 42 and 43 is remaining over there. So that once we complete this, then we can also go to our next chapter. That is the chapter on the audit of the banks. Okay. Right. So right now coming to clause 22, which is regarding the right now coming to the clause 22, right, which is regarding the interest to the MSMED suppliers, right? So now coming to 22, which is regarding the interest to the MSMED supplier. So if you make a late payment to an MSMED supplier, you have to pay the interest. If you pay that interest, is that interest allowed as a deduction under the income tax law? No, it is not allowed as a deduction under the income tax law. So the interest being paid to the MSMED supplier. So obviously what will this ensure? This will ensure the prompt payment to the MSMED supplier. Because you know, if I make a late payment, then I will have to pay the interest. That interest I will not get a deduction also. So better I do a prompt payment and before due date payment to the MSMED suppliers. Right. Then 23 is regarding the payments to the specified persons mentioned under 40A2B. And what is 40A2B? The payments to the specified persons, that is the related parties. And 40A2B, right, the payments to the specified persons, right, the payments being made to the specified persons. Are you able to follow 23? Right. Then after that, what is 24? It is regarding the 30 to 33, right? It is regarding the section 32, section 33 of the Income Tax Act. And the tea, coffee, rubber, jute, right, they get some deductions over there. Right. Then 25 is the computation under section 41. Right. What is section 41? Okay, when you say that there is a bad debt, do you get a deduction for that bad debt? Right, when you make a provision for bad and doubtful debt, do you get a deduction for the same as a bad debt? Yes, but later on say there is a recovery of the bad debt written off. So now will you have to pay the income tax on the same? Now will you have to pay the tax on the same? Yes. So that comes under 25, the section 41 of the Income Tax Act. Then section, yes, clause 26 is regarding the section 43B payments, where certain deductions are allowed only on the actual payment basis. Right. So 26 is regarding the 43B payments, where certain deductions are allowed only on the actual payment basis. Right. Then 27 has 27A and 27B. 27A is regarding the SENVAT credit. right? 27A is regarding the Senvat credit, or now it is the ITC, है ना, the GST ITC, and 27B is regarding the prior period items, right? 27B is regarding the prior period items. So 27A Senvat credit, 27B the prior period items. Are you understanding that? Right. And then 28, 29, 30, we'll come to that later. First, let us finish with 22 to 27. What is 22? Interest to MSMED suppliers. What is 23? Payments to the specified persons under 40A2B. Right. Then 24 is the section 32, 33, which is regarding the tea, coffee, rubber, jute. Right. Then 25 is regarding the section 41 computation. 26 is the 43B payments, where certain deductions are allowed only on the actual payment basis. And 27 is regarding the Senvat credit and the prior period items. Are you understanding that? 27 is regarding the Senvat credit and the prior period items. Okay. So 22, amount of interest inadmissible under section 23 of the MSMED Act 2006, right? So interest inadmissible under section, yes, 23 of the MSMED Act. Okay, so in the question bank, what is the situation so far? Have we completed with 37, 38 also? Yes, yes, now we have the further questions over there. Right, so one question which I could probably directly go to it because it has got many provisions covered together. Question number 47. Right, are you with me? Question number 47. PQR Auto, a partnership firm, is engaged in the manufacture of the spare parts, having the factory at Surat. CAS was appointed as the tax auditor of PQR Auto for 22-23. While carrying out the tax audit under section 44AB, CAS observed the following. Interest of 50,000 paid to vendor X, who was registered under the MSME Act. Where do you report that? Under clause 22 of form 3CD. It is inadmissible under clause 22 of form 3CD. Then interest payment of rupees 10,000 was incurred in relation to earning exempt interest income from the tax relief bonds. And so expenditure which forms of part of the total income, right, which that should not form part of the total income, where the income is exempt from the payment of the taxes. So where we had studied that under clause 21H of the form 3CD. And expenditure which is part of that income, which is not part of the total income. So expenditure on exempt income should not be deducted as an expenditure. Expenditure on the exempt income should not be allowed as a deduction, should not be allowed as an expenditure. So that is 21H. And then the third one which we are yet to see. Okay, right. So now again what we can do in our question bank is, in our markings over here, what we can do, question number 47, interest to MSMED suppliers, and this does not form part of the total income. Again there we can write down question number 47. Right, again there we can write down what? We can write down the question number 47. Are you able to follow this? Right, question number 47 for 21H also and for 22 also. Right, and for 22 also. Right, then what is the next one? Particulars of the payments made to the specified persons under 40A2B of the Income Tax Act. Right, payments made to the specified persons under the 40A2B of the Income Tax Act. Okay, right. So now payments made to specified persons under 40A2B of the Income Tax Act. Okay, so let us look into this question over here. An assessee has paid rent to his brother of 2,50,000 and paid interest to his sister of 4 lakh. State the reporting requirements in the tax audit report. Right, so what does it say? Payments to specified person. So your payment of rent to the brother and paid interest to the sister, right? So payment of the rent and interest. A tax auditor has to report under clause 23 of form 3CD, which deals with the particulars of payments made to the person specified under 40A2B of the Income Tax Act. Where the assessee is an individual, the specified persons include any relative of the assessee, that is husband, wife, brother, sister, and any lineal ascendant or descendant. In the present case, the assessee has paid rent to brother of 2,50,000 and interest to sister of 4 lakh, which may be disallowed if in the opinion of the assessing officer such expenditure is excessive or unreasonable, having regard to the fair market value of the goods and the legitimate needs of the business or the profession. Hence this fact needs to be reported in the tax audit report accordingly. Right, so hence this fact needs to be reported in the tax audit report. Right, so what do I write down over here? Question number 39, right? Question number 38 or 39, right? Question number 39, right? So question number 39. Okay, right? That is the payments made to the specified persons. Okay. Then one more question over there. Verma, carrying on the business of dealing and export of diamonds for the year 2014, you as the tax auditor find out that the entire exports are to another firm in USA, which is owned by Verma's brother. Right? So Verma is doing the business of dealing and export of the diamond. For 2014, you are the tax auditor and you found that the entire exports are made to another firm in USA, which is owned by Verma's brother. So here you are going to receive the money from the brother, from the relative. You are not going to make the payment to the person. And clause 23 is regarding the payments to specified persons. It is not regarding the receipts from the specified persons. Are you understanding that? Yes. So under clause 23 of form 3CD requires the tax auditor to specify the particulars of payment made to persons specified under section 40A2B of the Income Tax Act. And what does it say? Persons specified in this section are the relatives of the assessee and the sister concerned. In the given case, Mr. Verma has not made any payments to his brother. On the contrary, he must have received the payments from him against the export made, and thus this clause would be required to report. Thus this clause would be required to verify whether the exports are genuine, whether the diamonds have been delivered by verifying the necessary delivery documents, relevant invoices, the reasonableness of the price, and the export realization have been received. But is it a payment to a specified person? No, it is a receipt from a specified person. Are you understanding that? So question number 39 and also question number 40. And payments to specified persons. Are you able to follow this, everyone? Okay, right. Then after that, the next clause which we have over there is the 32AC, 32AD, 33AB, 33ABA, and the 33AC, which is all regarding the tea, coffee, rubber, jute. Right? So amount deemed to be profits and gains. Right? So again, deemed profits and gains. Then what is 25? Any amount of profit chargeable to tax under section 41. So what is chargeable under section 41? Any bad debts you had written off, saying that this person will not pay the money, and you claimed it as a deduction under the income tax law. But later on, that person paid you the money. So when he pays you the money, now on that you need to pay the income tax. Are you understanding that? So that is the clause 25. Okay. Right. So we have a question number 41. RB Limited is engaged in the trading of the engineering goods. Turnover of the company for 2021 was rupees 150 crore. During 1819, the company claimed deduction of bad debts amounting to 100 lakh while filing the income tax return out of the total debts of 150 lakh due from Mr. X. However, during 2021, the company was able to recover the 75 lakh from X through legal means and correctly credited this to their profit and loss account. As a tax auditor, is it required to report such transactions in the tax audit report under the Income Tax Act 1961? Right, so if it had not been credited to P&L, we would have also put it under clause 16. Had it not been credited to P&L, we would have also reported it under clause 16. But has it been credited to P&L? Yes. But what does it say? Again, tax audit report under Income Tax Act in the given case. Then tax auditor shall report this under clause 25 as under. Any amount of profit chargeable to tax under section 41 and the computation thereof. And then the audit procedures. What are the audit procedure? The tax auditor should obtain a list containing all the amounts which are chargeable under section 41 with the accompanying evidences, correspondence, etc. He should, in all relevant cases, examine the past records to satisfy himself about the correctness of the information. The tax auditor has to state the profit chargeable to tax under this section. This information has to be given irrespective of the fact whether the amount has been credited to P&L or not. The computation of the profit chargeable under this clause also is to be stated. And the tax auditor should maintain the following in his working papers for the purpose of furnishing the details. What? Serial number, name of the person, amount of income, section, description of the transaction, and computation if any. Right, so under section 41, any amount which is profit which is deemed to be chargeable under section 41, that needs to be reported over here. Right, so that comes where? In question number 41. Right, so where we have the clause 25. There what do we write down? Question number 41. Are you all with me? For clause 25, we write down the Where's clause question number 41? Right, then you have the 26. What is 26? Certain deductions are allowed only on the actual payment basis. That is the 43B payments, right? That is the 43B payments, okay, right? Which is regarding the 43B payments. In respect of any sum referred to in A, B, C, D, E, F, G of section 43B, the liability for which pre-existed on the first day of the previous year but was not allowed in the assessment of any preceding year and was paid during the year or not paid during the year. So was it your opening liability in the previous year? Yes. And during this year also did you pay it, or this year also you did not pay it? And second, was incurred in the previous year and was paid on or before the due date for furnishing the return of income, or not paid on or before the aforesaid date also. So one, whether it has been paid during the previous year. If not during the previous year, at least whether it has been paid before the due date of furnishing the return of income. And state whether sales tax, customs, excise, any other indirect taxes, yes, the levy, cess, impost, etc. is also passed through the profit and loss account. Right? So certain deductions are allowed only on the actual payment basis. So what you need to report over here, which was your opening balance. Opening balance, did you pay during the year or did not pay during the year? And it was incurred in the previous year and paid before the due date for furnishing the return of income, or whether it was not paid on or before the due date. So whether paid before the due date or not paid before the due date. And here whether it has been paid or whether it has not been paid. Are you understanding that? Right, so that is clause 26, which is regarding the 43B payments, where certain deductions are allowed only on the actual payment basis. Okay, you are doing the tax audit of a private limited company for financial year 2019. During the audit, you notice that the company is not regular in depositing the GST and there remains pendency every year. The details of the GST payable are GST payable as on 31st March 2018. So we are doing tax audit for which year over here? 2019. It says which was payable as on 31st March 2018 was 200 lakh, out of which 100 lakh was paid on 15th of September and 50 lakh was paid on 30th of March, and balance 50 lakh remained unpaid. Right, so what you do over here, opening balance is how much? 100 lakh. Amount paid during the year, 50 lakh, and amount unpaid at the end of the year, 50 lakh. Are you able to understand that? Beginning of the year, was the balance outstanding 1st April 2018? Yes. And how much amount has been paid during the year? 50 lakh. Second one, GST payable on the current financial year was 100 lakh, out of which 40 lakh was paid on 25th of May 2018 and balance of the 60 lakh remain unpaid till the due date of the return. So again, what does it say? Total how much it is? 100 lakh. How much has been paid before the due date? 60 lakh. And what is unpaid up to the due date, which is not paid within the due date, is the 60 lakh. Are you able to follow that? Right. And the date of the tax audit report and the due date of return was 30th of September. Now, as a tax auditor, right now as a tax auditor, how and where the said transactions will be reflected in the tax audit report under section 43BA. Right, so certain deductions are allowed only on the actual payment basis. So you will report it under clause 26A and 26B. Is it clear to everyone? Right, so this is an RTP question. So RTP questions for us are the waiting list questions. Do you understand that? Right, so what do? Over here we write down question number 42. Right, we write down question number 42. Okay, right, then after that, what is 27? It is regarding the SENVAT credit and the prior period items. Right, so amount of SENVAT or GST credit availed or utilized during the previous year and the particulars of item of income or expenditure of the prior period credited or debited to the P&L. So what is 27A? SENVAT credit. And what is 27B? What is 27A? SENVAT credit. And what is 27B? The prior period items. Okay, and again for the prior period items we have a question over there. Right, so just a moment. Yes, how will you verify the income and expenditure of earlier year which has been credited, debited in the current year for reporting under clause 27B of 3CD while carrying out the tax audit under 44AB of the Income Tax Act? So they say, how will you verify the income expenditure of the earlier year credited, debited in the current year. So prior period items coming in the current year. For one, this clause is relevant only for those assessees who are following the mercantile system of the accounting and not relevant for those assessees who are following the cash system of the accounting. Do you agree with that? Because if they are following the cash system of accounting, then there is not going to be any concept of the prior period item. So what you need to check is that whether they are following the mercantile system of the accounting. Okay. Right. So 27A is regarding the SENVAT credit, and 27B is regarding the prior period items. Okay, so one, it says it may be noted that information under this clause would be relevant only in those cases where the assessee follows the mercantile system of the accounting. Under the cash system of the accounting, what does it say? Expenses debited, credited to P&L would be current year expense, even though they may relate to the earlier year. The tax auditor, now what he needs to do? He needs to obtain the particulars of the expenditure or income of any earlier year which has been debited, credited to P&L in the current year only when the mercantile system of accounting is being followed. Right. In case if the person whose accounts of the business or profession have been audited under any other law, the information may be available from the annual accounts. What you can also do, if they are not audited under any other law, then a close scrutiny of the ledger can give you the information, and the information is to be kept in the working paper file for the purpose of reporting as under serial number, type, income, expense, particulars, amount, and prior period to which it relates to. Right, prior period to which it relates to. Right, so that is the question number 43. Is it clear to everyone? Prior period items, what is the question number there? Right, question number 43. Okay, and now we come to 28, 29, 29A and 29B. Okay, all of you with me? Right, now coming to the next set of clauses over there. Clause 28, clause 29, and under 29 you have 29A and 29B. Right, 28 is regarding the, all these are regarding the IOS, income from other sources. Income from other sources under 56 to 7A of the Income Tax Act. Income from other sources under 56 to 7B of the Income Tax Act. Income from other sources under 56 to 9 of the Income Tax Act, and income from other sources under 56 to 10 of the Income Tax Act. What are you receiving? You are receiving the income from the other sources. What is the income that you are receiving from the other sources? In clause 28, you are receiving the shares of a company in which the public are not substantially interested without consideration or for inadequate consideration. So either without or with inadequate consideration. So what did you receive in clause 28? Receive shares of a company in which the public are not substantially interested, either without consideration or for inadequate consideration. That means what is the fair market value? 1 lakh rupee. How much you receive them for? 12,000. That means you receive the shares for an inadequate consideration. Are you able to follow this? Right. 29, you receive the consideration for issue of shares. Again, of a company in which the public are not substantially interested, which exceeds the fair market value. Right, so now you receive consideration for the issue of shares. What is the fair market value? 1 lakh. How much you receive? 10 lakh. So again, income from other source, 9 lakh. Receive consideration for issue of shares which exceeds the fair market value. Are you understanding that? Okay. Then you have the 29A. Listen to me carefully, everybody. Right? Say I have a piece of land amounting to 10 crore. And I am entering into, I want to sell this piece of land of 10 crore. Right? So I enter into an agreement. I look out for a potential buyer, and then I find out a buyer who is ready to buy that land for 10 crore. Right? So right now we've just entered into an agreement. The transaction has not yet taken place, but it is mutually agreed that I will be selling the land to this person. So as a token amount, that person gave me 1 crore rupees. Right? But is the transaction yet completed? No, it is not yet completed. But am I going to do the sale of a capital asset, transfer of a capital asset? Yes. How much is the value of the land over there? 10 crore. And right now, how much advance I have received? I have received advance of 1 crore. Okay. Now, some reason the deal got cancelled. And for some reason the deal got cancelled. Now, whatever amount of 1 crore, that advance that person had given me, if I return it back to him, then no problem. Whatever advance of 1 crore that person had given to me, now because the deal got cancelled, if I return it back to that person, then no problem. But if I do forfeiture of advance received towards the transfer of a capital asset, then income tax department says 35% pays to us. And 30%, 35% pay to us. Are you understanding that? And if you return it, then no. But if you do the forfeiture of advance received towards the transfer of a capital asset, so that is 29A. What is 29A? Right? What is 29A? The forfeiture of the advance received towards the transfer of a capital asset. Are you able to follow this? Forfeiture of advance received towards the transfer of the capital asset. Right. And then you have the 29B, which is regarding the gifts received in excess of 50,000. Right. The gifts received in excess of the 50,000 or which exceeds the 110% of the consideration value or so, right? So 29B is regarding the gifts received, right? So all these are what? These are your income from the other sources under 56 to 7A, 56 to 7B, 56 to 9 and 56 to 10. So what are you receiving in clause 28? You're receiving shares. In 29, what are you receiving? Consideration for issue of shares. In 29A, what are you receiving? Forfeiture of advance received towards the transfer of a capital asset. And 29B, you're receiving the gifts. Are you understanding that, everyone? Okay. Right. So let us have a look over here. So now again in today's time, 28, 29 not relevant, but they've not yet updated the form 3CD. So it is still lying over there. I know. What does it say? That during the year, the assessee has received any property being a share of a company, not being a company in which public are substantially interested, without consideration or for inadequate consideration, then 56 to 7A. Then whether during the previous year the assessee has received any consideration for issue of shares that exceeds the fair market value as referred to in 56 to 7B. If yes, please furnish the detail. And then 29A, what does it say? Whether any amount is to be included as income chargeable under the head IOS under 56 to 9. What is 56 to 9? Right? Forfeiture of advance received towards the transfer of a capital asset. And then you have, if yes, please furnish nature of income and the amount thereof. And then whether any amount is to be included as income under the IOS under 56 to 10. Again, nature of income and the amount in rupees thereof. Right? So that is again the gifts received. So everybody, are you able to follow 28, 29, 29A and 29B? Okay. Right? So let us have a look at the question bank. Right? Question number 44. ABC Private Limited and XYZ Private Limited are the companies in which the public are not substantially interested. During the previous year, ABC received some property being shares, of the details of which are provided below. So what did you receive? You received the shares. Okay, so that means clause 28. And now what does it say? Number of shares 1000, face value 10, aggregate fair market value 1 lakh, and consideration value nil. That means you receive the shares without consideration, not inadequate. You receive the shares without consideration, right? So again, it says reporting for receipts of shares, the aggregate fair market value of which exceeds 50,000. Okay. Then a tax auditor has to report under clause 28. Then what you need to write in your answer is the section 56(2) of the income tax law. Provides that where a firm or a company, not being a company in which the public are substantially interested, receives any property being shares of a company in which public is, yes, not being a company in which public is substantially interested, which exceeds, without consideration, which exceeds 50,000. So up to 50,000 is allowed, or for a consideration which is less than the aggregate of the fair market value. And so I told you for without consideration or for inadequate consideration. As per the facts of the case, provisions and explanation, the income generated is being whole. Aggregate fair market value of the shares 1 lakh is chargeable to income tax under the head IOS as per 56 to 7A of the Act. Therefore, the tax auditor of ABC is required to furnish the details of such shares under clause 28 of form 3CD. Is it clear to everyone? Right. So question number 44. Right. So what do? Over here I write down question number 44. Right, question number 44, right? Receive shares without consideration or for inadequate consideration, right? Then after that, while doing the tax audit under 44AB of the Income Tax Act of the accounts of Glue Private Limited, it was found that Glue Private Limited had received 9,000 shares. So what did they receive? Shares. The market value of which was 90,000 on the date of transfer at a price of 45,000 from Stick Private Limited. The management of Glue mentioned that the transaction was as per the terms of the negotiation, and there would be no cost for the auditor to bring this matter in the tax audit report. Right. So what does it say? The company has received the shares for 45,000 and fair market value is 90,000. But what does it say? Is it exceeding the 50,000 over here? Is it exceeding is lesser than 50,000? Then it need not be reported. Therefore, the tax auditor of Glue Private Limited is not required to furnish the details under clause 28. Why? Because what is the fair market value? 90,000. What is the consideration? 45,000. So how much is the difference? 45,000. Is it less than 50,000? Yes. Therefore, the contention of the management of the company for not reporting such receipt of the shares is in order, right? So question number 45 also, which clause we will give reference to? Right, 28 only, right? So 44 and 45. Are you all with me? Right. When was it asked in the exams? November 2020, and before that asked in May 2016. Okay. Right. Then coming to question number 46. XYZ Private Limited, a company in which the public are not substantially interested, issued 1 lakh equity shares at a premium of 70 per share and face value of 10 per share. That means how much is the total value of the share? 80 rupees. Face value 10 rupee and premium is 70. Okay, the fair market value on the date of issue was the 60 rupees. So actual, what is the value of the share? 60. At what price they have sold it? 80. So have they received consideration which exceeds the fair market value? Have they received consideration which exceeds the fair market value? Yes. So the same needs to be reported under clause 29 of form 3C(d). Again coming to 56 to 7B, and therefore it says income from other sources as per 56 to 7B. Yes, which is required to be reported under clause 29 of form 3C(d). Are you able to follow this, everyone? Right. So that is question number 46. Right. So that is coming under the question number 46. त्याला सांगा ना ब्रेक मध्ये करायला. अच्छा, ठीक है. Yes, question number 46. Right. Now coming to the 47.3 over there. Right. Coming to the 47.3 over there. Sum of X. Yes, 1 lakh was received from Mr. X. Right. Sum of 1 lakh was received from Mr. X for the sale of one plant and machinery. But due to non-compliance of one of the condition as specified in the contract with Mr. X, PQR Auto forfeited 1 lakh during AY 22-23 as per the forfeiture clause mentioned in the contract, right? So what did it say? You entered into an agreement to sell an asset, but what you did? Forfeiture of advance received towards the transfer of a capital asset. Where do you report that? Right, 29A of the form 3CD. Right, 29A of the form 3CD, which is the 56 to 9. Okay. Yes. The nature of the income and the amount thereof, right? So the auditor is required to obtain a certificate from the assessee regarding all such advances received towards the transfer of the capital asset which have been forfeited during the year, and examine whether any of the amount of such advance has been written back during the year. So where is it required to be reported? Under 29A. Are you all with me? Yes, what is 29A? Forfeiture of advance received towards the transfer of the capital asset. Okay, right. Then now these small questions over there. Company has received an advance for capital asset and the same is outstanding for 5 years and expected to remain outstanding as on 31st of March. What would be the tax auditor reporting responsibility? So have you received an advance? Yes. But is it outstanding? Yes. Is it outstanding as at 31st of March? Yes. So have you done the forfeiture of the same? No. So is there any reporting requirement? No. No requirement to report. Then if an assessee has forfeited the amount without the right of forfeiture as per the agreement, then can it become income under 5629 also? Yes. It says still it can become the income. The amount so forfeited may become the income even though if it is not mentioned in the agreement, right? Even though if it is not mentioned in the agreement. Okay. Then if an assessee has not forfeited the amount, even though the conditions of forfeiture is applicable, will it become an income under 5629? If it is not forfeited? No, if you don't forfeit, it will not become your income. Only if you do the forfeiture, whether mentioned in the agreement or not mentioned in the agreement, then it says it will become your income, right? So what questions we have over here? 47, 48, 49 and the 50, right? So 47, 48, 49 and the 50, right? 47, 48, the 49 and the 50, right? Which is regarding the 29A. What is 29A? Forfeiture of advance received towards the transfer of the capital asset. Is it clear to everyone? Okay. Right. Right. Now coming to the last one in the 21. एकदा office मध्ये जाऊन सांगा ना. Right. Right. So now coming to the last one in the series over here, right? So what is the chart that we are updating over here? Prior period items. Now what will I also write down in this chart over here? After prior period items in 28, what do you receive? In 28, you receive the shares. In 29, you receive the consideration for the issue of shares which exceeds the fair market value. Then you also have the 29A, wherein you do the forfeiture of advance received towards the transfer of the capital asset, and 29B, which is regarding the gifts received, right? So you also have the 29A and the 29B. Are you understanding that? Sound? Yeah, but can you do it later, please? Yeah. Right. So 29 is the consideration and 29 is A is regarding the forfeiture and 29B is regarding the gifts received. Right. Then 30 is regarding the amount borrowed on any hundi other than by account pay check or account pay draft. Right. So 30 is regarding the amount borrowed on any hundi. And now here we have the 30A, we have the 30B and we have the 30C. So just as after 29 we had 29A and 29B, here we have the 30A, 30B and the 30C. Right, so amount borrowed on any hundi, that is the 30. And now what we also have over there is the 30A, the 30B and the 30C. Are you able to understand that? Right, now what we have also for our discussion is 30A, 30B and the 30C. Right, 30A is regarding the primary adjustment. Right, 30A is regarding the primary adjustment. 30B is regarding the limitation on the interest deduction. 30B is regarding the limitation on the interest deduction, and 30C is regarding the impermissible avoidance arrangement. Right, 30C is regarding the impermissible avoidance arrangement. It is regarding the impermissible avoidance arrangement. Right, so 30 is regarding hundi. And then 30A, 30B and 30C. 30A is regarding whether any primary adjustment is to be done. 30B is regarding the limitation on interest deduction. And 30C is regarding the impermissible avoidance arrangement. Okay, right. Now say the assessee has purchased goods from an associated enterprise outside India. I'm talking about 30A right now. Say the assessee has purchased the goods from an associated enterprise outside India. Say for what price have they purchased the goods? 120 crore. From whom have they purchased from outside India? From an associated enterprise. Okay. If the same goods had they purchased from another party, that is not from an associated enterprise, then they could have been purchased for 100 crore. Right, so is it at the arm's length price, the transaction? No, it is not at the arm's length price. Are you understanding? Now if the assessee has purchased the goods of 120 crore, will it make the payment of 120 crore? Will it make the payment of 120 crore outside India? Yes. But actually, how much payment should be made outside India? Only the 100 crore. So 20 crore of the excess payment has happened outside India. 20 crore excess payment in my example has happened outside India. So what does it say? Whether any primary adjustment is required to be done. If the adjustment is to be done, then what is the details, the amount of such adjustment. Then whether the excess money, whether it has been repatriated to India. And so that excess money, in my example, what is the excess money? As 20 crore, whether the excess money has been repatriated to India, whether it has been repatriated to India within the due date, and if not, then the imputed interest income on the same. If it has not been repatriated because we've made excess payment outside India, so again the imputed interest income on the same. And this primary adjustment is applicable only when the adjustment is of 1 crore and above. When it is of 1 crore and above, right? So it's your transfer pricing thing over here, right? You're making a payment outside India, which is exceeding the arm's length price. So you've made excess payment outside India. It says whether what is the amount, then whether that amount has been repatriated, whether it has been repatriated within the prescribed time limit, and if not, then the imputed interest income on the same, right? So that is the primary adjustment. Okay, right. Now you have taken a loan from an associated enterprise. Now you've taken a loan from an associated enterprise. Let me just take an example that the EBITDA of the company is 100 crore. Example, how much is the EBITDA of the company? 100 crore. And now you have taken a loan, and do you need to pay the interest on that loan? You have taken a loan from an associated enterprise. Do you have to pay the interest on that loan? Right. Say the interest on the loan is coming to 40 crore. Right, interest on the loan is coming to 40 crore. And how much is your EBITDA? Say 100 crore. Now interest expenditure, is it allowed as an expenditure? Is it allowed as a deduction? Yes. But what does it say? There is a limitation on interest deduction. What is the limitation? Up to 30% of EBITDA you can take it as an expense in the current year. Remaining you need to carry forward in the next year. So 30% of EBITDA is how much? In my example, how much is the EBITDA? 100 crore. In my example, how much is the EBITDA? 100 crore. So how much is 30% of that? 30 crore. So how much is the total interest? 40 crore. Out of that, how much expenditure I can take in the current year? 30 crore. And then what does it say? 10 crore I need to carry forward to the next year. I need to carry it forward to the next year. Again, this is also applicable when the adjustment is of more than 1 crore. Right, again applicable when it is more than 1 crore, and whether the assessee has entered into any impermissible avoidance arrangement. What is impermissible avoidance arrangement? The DTAA, the double taxation avoidance agreement. Same goods are getting taxed in two countries or same services. So in order to avoid the double taxation, they enter into a treaty, they enter into an agreement, which is called as the impermissible avoidance arrangement, right? So if the assessee has entered into any impermissible avoidance arrangement, right? So that is 30A, 30B and the 30C, right? So what is 30A, B and C over there? 30A is regarding the primary adjustment. 30B is regarding the limitation on the interest deduction, the limitation on the interest deduction. Are you getting that? And 30C is regarding the impermissible avoidance arrangement, right? 30C is regarding the impermissible avoidance arrangement. Are you all with me? Right. 30 is regarding amount borrowed on any hundi other than by account paid check or the account paid draft. Okay. Then 30A, whether any primary adjustment to the transfer price is to be done. If yes, then under which clause it is to be done? What is the amount of the primary adjustment? Then whether the excess money has been required to be repatriated. If yes, then whether it has been repatriated within the prescribed time. If no, then what does it say? Yes, the imputed interest income of such money. Right? So imputed interest income. Right? So that is 30A, which is regarding the primary adjustment. Are you able to follow this, everyone? Right. Then you have the 30B, which is regarding the limitation on interest deduction. When is it applicable? For exceeding the 1 crore. Then what does it say? Amount of the interest expenditure. In my example, how much it was? 40 crore. How much was the EBITDA of the company? 100 crore. How much was it in excess of 30% of EBITDA? Right. So what did we say? 10 crore, because 30% of the EBITDA is coming to, right, 30 crore, and then 40 crore minus this 30% of EBITDA is equal to 10 crore, right? So details of interest expenditure which has been brought forward, and details of interest expenditure which has been carried forward. So what you're bringing forward from the earlier year and what you're taking forward in the current year. Are you getting that, everyone? Okay. And then 30C is regarding the impermissible avoidance arrangement. If yes, the nature of the arrangement and what is the tax benefit to all the parties in the arrangement. Is it clear to everyone? 21 to 30. Right. So have we now completed with 21 to 30 also? Right. So what is 21? Right. What is 21 over there? Right, the amounts debited to PNL. Is it clear to everyone? The amounts which have been debited to PNL. Then 22 is regarding the interest to the MSMED suppliers. 23 is the payments to the specified persons. 40 A to B payments. Then 24 is regarding the 30 to 33. 25 is regarding the section 41 computation. 26 is the 43B payments. Okay, certain deductions are allowed only on the actual payment basis. 27 is the SENVAT credit and the prior period items. 28 received shares. 29 received the consideration for issue of shares. 29A forfeiture of advance. 29B gifts received. 30 amount borrowed on any hundi. Then 30A is regarding the primary adjustment. 30B limitation on interest deduction, and 30C is regarding the impermissible avoidance arrangement. Is it clear to everyone? Right. Now coming to 31 to 40. Are you all with me? Right. So now coming to which clause over there? Coming to clause 31 to 40. Yes. Are you drawing something similar like this in your books also? Right. So now coming to 31 to 40 and 31. And now talking about the clause 31 of the form 3CD is one of the most gigantic clause of the form 3CD, because in that you have 31A, 31B. In B, you have 31BA, BB, BC, and the BD. Then you have 31C, 31D, and the 31E. Right, clause 31 of form 3CD. You have 31A, 31B, 31C, 31D, 31E. And under 31B, you have 31BA, BB, BC, and the BD. And right now, what is trending in the exam is this BA, BB, BC, and the BD. This is trending. Are you getting that, everyone? Right. So what is clause 31 regarding loan accepted or repaid? And a loan accepted or repaid of more than 20,000 other than by account, pay, check, draft, or the ECS. Or what does it say? Receipts or payment relating to a single event or occasion. Payment made to a person for a single event or occasion in cash exceeding rupees 2 lakh. Right, so loans accepted or repaid more than 20,000 other than by account, pay, check, or draft, and receipts and payments in excess of 2 lakh being made by other than account, pay, check, account, pay, draft, or the ECS. Right, so that comes under 31 BA, yes, BA, BB, and BC and BD. Right, 31 BA, BB is regarding the receipts, and BC and BD is regarding the payments. Are you understanding that? Right, this is regarding 31A and B is regarding the loans accepted, and CDE is regarding the repayments, right? CDE is regarding the repayments. Right, so this is just an outline for you of what is clause 31 about. Right, this is just an outline for you for what clause 31 is about. Right. So 31A, what does it say? Whether the assessee has borrowed, yes, whether it has, any loan has been accepted, right, during the year other than by account, pay, check, or the account, pay, draft, right? 31A. So one, did I give you the outline of 31? 31A, 31B. Then after B, you have the BA, BB, BC, and the BD. And then after that, you have the 31 C, the 31D and the 31E. Are you all with me? Right. Then after that, now what does it say? In first case, where the particulars of each loan or deposit in an amount exceeding the limit specified under 269 SS. What is the amount specified under 269 SS? 20,000. So loan or deposit which have been taken or accepted during the previous year exceeding the limit in 269 SS. What does it say? Details, name, address and the PAN or the Aadhaar, right? The name, the address, the PAN or the Aadhaar if available. Earlier there used to be only name, address, PAN. Now what they've also added over there is the Aadhaar, right? So name, address or the name, address, PAN or the Aadhaar. Again over here, name, address, PAN or the Aadhaar. So if you look at all the points over there, right, and all of them, what is the first point given over there? Name, address, PAN or Aadhaar, right? Name, address, PAN or the Aadhaar number. Are you getting it? Right, for each of them, if I come right up to the 31E, what is the first point constant over there? Name, address and PAN or Aadhaar number if available with the assessee of the payer. Are you getting that, everyone? Okay, right, so name, address and PAN. What does it say? Loan or deposit taken or accepted of more than 20,000. Then first thing what is required is the NAP. What is the NAP? Name, address and the PAN, right? The name, the address and the PAN and the Aadhaar. Then the amount of loan or deposit which has been taken or accepted. Then the amount or loan or deposit which has been squared up during the year. Then the maximum amount outstanding at any point of time during the year. Then whether the loan or deposit were taken by check or draft or using the ECS. So whether it was taken by check or the draft or using the ECS. In case if the loan was taken by the check or draft, whether the same was taken by an account pay check or an account pay draft. Right, so if whether the loan was taken by the check, draft or the ECS, and if it was taken by check or draft, then whether it was the account pay check or the account pay draft. So first thing what is required is the NAP. After the NAP, what does it say? The amount. Then the amount which has been squared off during the year. Then the maximum amount outstanding at any time during the year. Then whether it was taken or accepted by check or draft or ECS, and if it was by check or draft, whether it is an account pay check or account pay draft. And again, what does it say? These particulars are not to be given in case of a government company, banking company or a corporation established under the central, state or the provincial act, right? So again, this is important for the MCQ. And not applicable for government company, banking company or a corporation which has been established by the central, state or the provincial act. Okay, what is 31A? Particulars of each loan or deposit taken or accepted. Are you all with me? Loan or deposit taken or accepted. What is 31B? The particulars of each sum again exceeding the limit taken or accepted. Right, so is it similar only? In 31A they say loan or deposit. In 31B they take about the specified sum. Specified sum, like again, I have entered into a contract with some person, they've given me an advance, so I have received the money. And also particulars of a specified sum taken or accepted in exceeding the limit. Again, in that case, what does it say? Name, address and the PAN. So that is again the NAP, right? That is again the NAP. Then after that, the amount. Then the amount which was taken by the check, draft or the ECS. And if it was by check or draft, whether it is an account pay check or an account pay draft. And again, these particulars are not to be given in case of the government company, right? These particulars are not to be given in case of the government company, a banking company or a corporation established by the central, state or the provincial act. So are you seeing 31A and B are quite similar? As 31A talks about loan or deposit accepted or taken, and 31B talks about specified sum taken or accepted. Is it clear to everyone? BA, BB, BC, BD, we'll come to that later. First, let us finish with the CDE. Now what they are talking about, particulars of each repayment. In A and B, what we had done? A and B, what we had done? We had taken or accepted. Now what we are doing in 31C? We are doing the repayment of each loan or deposit or the specified advance. So now A, B combined together. And a loan also, deposit also, specified amount also. So repayment of any loan or deposit or any specified amount, advance in an amount exceeding the limit. Again, in that case, what is required is the NAP. Then again, the amount of the repayment, the maximum amount which is outstanding at any point of time. And again, whether the repayment was done by check, draft or ECS, and if it was done by check or draft, whether it was an account pay check or account pay draft. Right, so whether you took the loan also by account pay check or draft, and whether you're repaying also the loan or specified sum by the account pay check or account pay draft, if it is exceeding the 20,000. Are you understanding this, everyone? Right, then after that, next one, particulars of repayment. Again, they are talking about repayment of loan or deposit or specified advance. So same like 31C and a 31D also, in an amount exceeding the limit specified in section 269T. But now what they are talking about, okay, this year, right now, you are repaying those loans. And right now you are repaying those loans which originally you had taken by a cash and taken otherwise than by a check, draft or by use of the ECS. So now, which of those loans have you repaid during the previous year, which originally you had taken in the cash? So earlier, this is the repayment of all loans, whether taken by cash or whether by account pay, check or draft. Now here, what does it say? Particulars of repayment of those loans which were originally taken by you in cash. Right, so what does it say? Again, the NAP, the name, address and the PAN, right? The name, address and the PAN, and the repayment of the loan, deposit or the specified amount received otherwise than by a check, bank draft or the ECS, right? So again, the repayment, right? So again, you need to mention the amount. Is it clear to everyone? 31C and 31D, right? And then you have the 31E, which is also talking again about the repayment only. You understand? Repayment of loan, deposit or specified advance. Again, talking about repayment of loan, deposit or specified advance. Now again talking about the repayment of loan, deposit or the specified advance in an amount exceeding the limit under the 269T received by a check or a draft, which is not an account pay check or an account pay draft. So here it was by cash. You are repaying those loans which you had originally received in cash, and now you are repaying those loans which you had originally received by check or draft, which was not an account pay check or an account pay draft, right? Which was not an account pay check or an account pay draft. Are you able to follow that, everyone? Right, so what does it say? Yes, the repayment. So again, the NAP, the name, address and the PAN, and then again the amount of the loan which has been repaid. Right, amount of the loans which have been repaid. And again, these details need not be given in case of the repayment of the loan, right, for any deposit or specified sum which is taken from the government or the government company or the banking company or a corporation which has been established under the central, state or the provincial act. Right, are you understanding 31A? Loan or deposit taken or accepted of more than 20,000 other than by account pay, check, draft or the ECS. Then what is it? Specified sum accepted, taken or accepted of more than 20,000 other than by account pay, check or the draft or the ECS. Are you understanding 31A and B? And what is 31C? It is regarding the repayment, right, which has been done by other than account pay, check or the draft. And 31D is regarding those repayment which you have done during the year which originally you had taken in cash. And 31E is you are doing those repayments during the previous year which originally you had accepted by check or draft, which was not an account pay check or an account pay draft. Okay, clear to everyone? So now let's come to 31BA, BB, the BC and the BD. Right, 31BA and BB is regarding the receipts. And now what does it say? You are in receipt of money in excess of 2 lakh rupees in cash. Right, so what does it say? Particulars of each receipt in an amount exceeding the limit. What does it say? In 269 ST, in aggregate from a person in a day or in respect of a single transaction or in respect of transaction relating to one event or occasion from a person during the previous year where such receipt is otherwise than by check, draft or the ECS. Right, so receipt from a person in a day in respect of a transaction or relating to one event or occasion is exceeding the limit specified under 269 ST. That is, what is the amount? Receipts in excess of 2 lakh rupees in cash. right? So what details are required to be given? First detail, NAP, name, address, and the PAN. Then the nature of the transaction, then the amount of the receipt and the date of the receipt, and receipts of more than 2 lakh in cash. Then BB, again, particulars of each receipt in an amount exceeding the limit specified in 269 ST in aggregate from a person in a day in respect of a single transaction or relating to one event or occasion which is received by a check or draft, which is not an account pay check or account pay draft. So now you are in receipt of excess of 2 lakh, but now it is by a check or draft, which is not an account pay check or account pay draft. So now they want only two details. What two details? Name, address, PAN, and the amount. When it is in cash, what also details they wanted over there additionally? Nature of the transaction and the date of the receipt when it was in cash. But where it is by check draft, which is other than account pay check or draft, they only want the NAP and the amount. They only want the NAP and the amount. They don't want the nature and the date. Are you understanding that? Right. 31BA and BB is regarding the receipts. 31BA and BB is regarding the receipts. Now 31BC and BD is regarding the payments. So payments in excess of 2 lakh being made by cash. Right, so payments being made to a person in a day for a single event or occasion. What does it say? Otherwise done by a check draft or the ECS. So name, address, and the PAN. Then the nature of the transaction. Then the amount and the date of the payment. Are you able to follow that? And then what is 31BD? Yes, payments in excess of the 2 lakh, payment in excess of 2 lakh being made by check or draft, which is not an account pay check or an account pay draft. Yes, so in that case, what detail they want? Only the NAP and the amount. Are you understanding? Right, so say there was a program, there was some program, and for that program, the payment was made to the caterer of 5 lakh rupees in cash. Right, so your organization, where will the tax auditor do the reporting for your organization? In 31B, 31B, see, your organization, your client, they had an event and they made a payment to the caterer of 5 lakh in cash. Okay, so where will your tax auditor report? In 31B, because payment in excess of 2 lakh being made in cash. Okay, and for that caterer ka company, for that caterer ka tax auditor, he will report it under 31B. He will report it under 31B because it is receipt in excess of 2 lakh rupees in cash. Are you able to follow this, everyone? Right, so depending upon whether you're receiving or whether you're paying the money. Okay, right, so again this food catering and some question coming over there. Right, so one question number 51. Right, so coming to question number 51. The provisions of section 269 SS are not applicable to some organizations. Mention those organizations. Right, so did we just study that in the exception? Not applicable to government, not applicable to banking company, not applicable to any corporation which is established by the central, state or the provincial act, also not applicable to any government company or such other institution as may be notified in the official gazette. Right, as may be specified in the official gazette. Are you able to follow this, everyone? Not applicable, right? So not applicable. Yes. 31? Yeah, 2 lakh. No, but this is, they're given a different dimension over here. Here they talk about for a single event or occasion. That is separate. That what you saw, payment in excess of 10,000 being made by other than account pay check or draft, that is separate. Now here this is for a particular event or occasion. And okay, you're making, we will see one question over there, okay, relating to the flower decoration, relating to the catering, relating to the stage decoration, all put together to one party. They say in a single event or occasion, single party, the payment made is in excess of 2 lakh. So then in that case, the reporting will come under 21 also and it will come under 31 also. Yeah, 21 for debiting to PNL because it's in excess of 10,000. Okay, right. So now over here, let us look into the, have we studied this in the exception over here? What does it say? Government company, banking company, or a corporation established by the central, state, or the provincial act, right? So that has been asked as a question in your exams, right? So what we can do over here, we can write down the question number 51. Right, question number 51. Are you all with me? Right, and then after that, question number 52. KK is a contractor dealing in food catering, flower decorating, and the light decorating activity. He has received contract in respect of the food catering and the flower decorating from one NGO for holding the annual talent evening event to celebrate completion of 25 years of their establishment. For the said event, Mr. KK has received in cash 1,85,000 for food catering and 1,25,000 for the flower decoration. As a tax auditor, how would you deal and report on the above, right? So it is receipts in excess of the 2 lakh being received by in cash. So 31BA of the form 3CD. What does it say? Payment made received from one person which is exceeding the prescribed amount of 2 lakh. This tax auditor is required to report the same in compliance with 31BA of the form 3CD. Right, 31BA of the form 3CD. Are you understanding that? Question number 52. So where do I write down question number 52? 31BA. Right, question number 52. Is it right, everyone? Right, 31BA. That is question number 52. And now, as an auditor appointed under section 44AB of the Income Tax Act, how would you verify and report on the following? The assessee has borrowed 50 lakh from various persons, partly in cash and partly by the account paycheck. Right, so partly by cash, then what does it say? It needs to be verified and needs to be reported in compliance with the clause 31 of the form 3CD. Right, so again, it needs to be reported under the clause 31 of the form 3CD, right? So that is question number 53, right? So where we have started with our clause 31, can we also write down over there question number 53? Yes, can we write down over there question number 53? Yes, so that is regarding the borrowal of 50 lakh. And now coming to the 32. Right, so again, if I come to my box which we are preparing over here, right, this particular table which we are preparing over here, right, so in this table so far what we have written up to is 30. Now we write about the 31. What is 31? It is regarding the loan accepted or repaid, loan accepted or repaid of more than 20,000 other than by account pay, check, or draft. And also it talks about the receipts and payments of more than 2 lakh, and receipts and payments of more than 2 lakh. Okay, so that is regarding the 31. And loans accepted or repaid of more than 20,000 and the receipts and payments in excess of the 2 lakh, right? Then 32 is regarding the brought forward loss and the depreciation allowance. It is regarding the brought forward loss, the depreciation allowance, and also regarding the speculation loss, right? So again, for speculation loss, we will see a question over there. So brought forward loss, depreciation allowance, and the speculation loss. That is 32. Brought forward loss, depreciation allowance, and the speculation loss, right? 33 is your standard deductions under section 80, chapter 10, and all these standard deductions, right? 34 is regarding the TDS and the TCS, the big table which you need to fill regarding the TDS and the TCS. Are you all with me? 33 standard deductions, 34 TDS and the TCS, 35 is regarding the quantitative details in case of a trading concern and a manufacturing concern, right? 36 has been omitted. I know clause 36 has been omitted, but we have the 36A. But we have the 36A, which is regarding the deemed dividend. But we have the 36A, which is regarding the deemed dividend. What was 36? It was regarding the dividend distribution tax, which is now no longer there. That is why 36 has been omitted. But we have 36A, which is regarding the deemed dividend. So 36 has been omitted. But is there a 36A? Yes, that is regarding the deemed dividend. And then 37, 38, 39 we've already seen. So what we have next over there is the 40. That is the accounting ratios in the form 3CD, right? We have the accounting ratios in the form 3CD. right? The accounting ratios in the form 3CD, right? So this is our journey from 31 to 40. Are you all with me? Right, 31, biggest one, loan accepted or repaid of more than 20,000, receipts or payment of more than 2 lakh. Then 32, brought forward loss, depreciation allowance and the speculation loss. 33 is the standard deductions. 34 is the TDS, TCS. 35 is the quantitative details. Then 36 is omitted. 36A is regarding the deemed dividend. Then 37, 38, 39, cost audit, excise audit and the service tax audit. And 40 is regarding the accounting ratios in the form 3CD, right? So let us again come to the clauses, come to the form 3CD, right? So have we completed with 31? Yes, so now coming to 32. What is 32? Brought forward loss or the depreciation allowance. If yes, the details have to be given. Assessment year, nature of loss allowance, amount as return, any losses, allowances which are not allowed under 115 BA. Again, if you go for the taxation scheme, again not allowed, right? Then amount as adjusted by withdrawal of the additional depreciation for opting for the taxation, amount as assessed and the remarks, right? So brought forward loss or the depreciation allowance, right? Then whether there has been any change in the shareholding has taken place during the year, due to which the losses incurred in the previous year cannot be allowed to be carried forward in the current year. And in the previous, in terms of section 79, I told you, many people are interested in buying the loss-making company. Why they are interested in buying the loss-making company? Because their profit and this company ka loss, they want to adjust. It says you cannot. Right, so any change in the shareholding has taken place during the year, due to which the loss incurred in the prior to the previous year cannot be allowed to be carried forward. So you cannot carry forward loss of some other entity over there. Then whether the assessee has incurred any speculation loss referred to in section 73. Then whether the assessee has incurred any loss referred to in section 73A. And in case of a company, please state whether the company is deemed to be carrying on the speculation business as referred to in explanation of section 73. And if yes, please furnish the details of the speculation loss, right? So C and E is both regarding the speculation loss only. But here it simply says whether the assessee has incurred any speculation loss. And here it says in case if it's a company, first tell us whether the company is deemed to be carrying on the speculation business, and then what is the amount of the speculation loss which has been incurred during the previous year, right? So again, we have a question for this one, right? What question we have? Question number 54. Tiger Limited is a company engaged in the production of wool. Along with its production business, it is also engaged in the buying and selling of securities with the expectation of a favorable price change. During the year, its speculation loss on account of the purchase and sale of security was to the tune of 12 lakh. As a tax auditor, what is the reporting requirement in Form 3CD under Section 44AB of the Income Tax Act? Right, so is it deemed to be carrying on the speculation business over there? Yes. And then also, is there a speculation loss which has been incurred? Yes. So one, what does it say? Reporting requirement, in which you write down the facts of the case. Then provisions and explanation. As per clause 32 of Form 3CD, 32E, the tax auditor has to report whether the company is deemed to be carrying on the speculation business, and also whether it has incurred any speculation loss. And what does the explanation to section 73 say? Provides that any part of the business of the company consists in the purchase and sale of other shares of other companies. Such company, for the purpose of this section, be deemed to be carrying on the speculation business to the extent to which the business consists of the purchase and sale of such shares. In the given case, Tiger Limited is engaged in the production of the wool, and side by side it is also dealing in the buying and selling of the securities with the intention of the speculation. What does it say? With the intention, expectation of a favorable price change. That means with the intention of the speculation. During the current year, the company has made speculation loss of the 12 lakh. Therefore, the tax auditor of Tiger Limited is required to furnish the details under clause 32E of Form 3CD with respect to the speculation loss of 12 lakh made during the year, right? So that is question number 54, right? So for speculation loss, what question we have over there? Question number 54 for the speculation loss. Is it clear to everyone? Right. Then you have the chapter 10 deductions, right? The section 10 deductions and the chapter 6 deductions, right? So all the deductions which you get under the income tax law, right? So the sections under which the deduction has been claimed, that is 33. And what is 34? Oh my God, 34 is that big table which you have to give in the form 3CD regarding the TDS and the TCS, right? So whether the assessee is required to deduct or collect any tax as per the provisions of chapter 17B or 17BB. If yes, please furnish the details. Tax deduction and collection account number section, that is 94 or 194, which section is the tax being deducted or collected, nature of the payment, the total amount of payment or receipt of the nature specified in the column 3. So nature, what is nature of the payment, what is the amount of the payment, total amount on which the tax was required to be deducted, right? Then the total amount on which tax was deducted or collected, so on what it was required to be deducted, on what it has been deducted or collected, then what is the amount of the tax deducted or collected, then the amount of the tax collected or deducted at a rate less than the rate specified earlier, has been collected, deducted at a rate lower rate than the rate specified, then the amount of the tax deducted or collected, and also whether it has been deposited to the credit of the central government out of the, yes, before the due date, right? So those few words are missing over there, right? But if I come to the original form 3CD, right, I have the original form 3CD over here, right? So whatever words, in case they have gone in the formatting over there, right, we have over here the 32 and then the 34, right? So 34, what does it say? 34A, tax deduction and collection account number, section nature of payment, total amount of the payment or receipt, then on which it is required to be deducted, on which it has been deducted, then what is the amount of tax deducted at a rate less than the rate specified out, and then amount of tax which has been deducted or collected, and which has been deducted, collected and not deposited to the credit of the central government out of 6 and 8, right? So out of 6 and 8. Right, so there it is out of the 7, and here it is out of the 6 and the 8. Are you getting that, everyone? Right, out of the 7, and here it is out of the 6 and the 8. Is it clear to everyone? Right, so then whether the assessee is liable, required to furnish the statement of tax deducted or tax collected. So again, you need to file the return and furnish the statement of the tax deducted or the tax collected. If yes, again, what does it say? The TAN, the tax deduction and collection account number, the type of form, the due date for furnishing, date of furnishing, then whether the statement of the tax deducted, collected contains all information about all the details, transactions which are required to be reported and those transactions which have not been reported, and whether the assessee is liable to pay any interest, then again the TAN, the amount of interest and the amount paid out of the column 2 along with the date of the payment, right? So these are all the details which are required to be given regarding the TDS and the TCS. Okay, right. So discuss the reporting requirements in form 3CD of the Income Tax Act regarding the tax deducted at source. Right, so tax deducted at source means it's a direct question asking you regarding the clause 34, right? So question number 55. And then after that, what is the other question we have over there? While conducting the tax audit of PJP Limited, you observe that the company has filed the ETDS return for TDS deducted on salary under 192 of the Income Tax Act in form 24Q in respect of the fourth quarter period from 1st January to 31st March. The company has not furnish the list of the details which are not reported in the statement of TDS under the pretext that TDS statements are furnished within the prescribed time. As a tax auditor, how would you deal and report, right? So do they need to give the details of the transactions also if they are not reported? Yes, so 34B, right? So 34B deals with the information pertaining to the statement of the TDS and TCS. As per this clause, a list of the details and the transactions which are not reported in the statement of TDS, TCS are required to be furnished. The reporting requirement is notwithstanding that the assessee has furnished the statement within the prescribed time. Right? In view of the above, PJP Limited is required to furnish the list of details which are not reported in the statement of the TDS, right? Which are not furnished in the statement of the TDS. Are you understanding that? So that is also the question number 56, right? So question number 55, and for 33B you have the 34 4B, you have the question number 56. Right, you have the question number 56, right? 57, have we already seen that? Right, 57, what is it regarding the non-maintenance of the stock register? So we said clause 11 and clause 35 of the form 3CD, right? Clause 11 and clause 35 of the form 3CD. Okay, right. And now again over here, question number 58. As the tax auditor of RM and company for the assessment year 21-22, how would you report and deal and report on the following? RM company has borrowed 75 lakh from a bank at the rate of 10% per annum for the purchase of the machinery. The machinery was purchased on 30th of September 2020 but was put to use on 10th of April 2021. The interest paid to the bank for 2021 was charged to the profit and loss account, right? Can it be charged to the profit and loss account, right? It talks over here about the 21A, capital expenditure, right? It should not be charged to the profit and loss account. And also 21I, which is amounts inadmissible under 3613. And what is one of the inadmissible amount over there? The interest paid. And the borrowing cost, the interest paid over there. And RM company is a trading concern and maintaining the quantitative details of the items traded. The said details have been provided to you by the company for meeting the reporting requirements, if any. Right, so again, where these details are to be reported under 35A of the form 3CD. Right, under 35A of the form 3CD. In the given situation, what does it say? RM and company has borrowed 75 lakh from a bank at the rate of 10% per annum for purchase of machinery. The machinery was purchased on 30th September but was put to use on 10th of April. The interest paid to bank for 2021 was charged to the PNL of RN and company is not in order in accordance with the proviso to section 3613. Therefore, reporting of the same will be done under 21A and 21I of the form 3CD, right? So 21A and the 21I, which is this question? This is question number 58, right? Which is this question which we are looking over there at question number 58. Okay, right? So where we have our 21I, I know where we have the 21I, right? There we can also write down the question number 58, right? Where we have the 21I, then we can also write down the question number 58. Right, also write down the question number 58. Okay, right. And then after that, further, next, what is the other question over there? The quantitative details. In case again, so certificate should be obtained and the reporting should be done as per the clause 35A of the form 3CD, right? So question 58, you will also give a reference where? Right, question 58, you will also give a reference at, right, clause 35, right? And 36 has been omitted. 36A is regarding the deemed dividend, whether assessee has received any amount in the nature of the dividend under 222E. If yes, please furnish the details of the amount received and the date of the receipt, right? So any deemed dividend, whether the assessee has received any amount in the nature of the dividend, then what does it say? If yes, please furnish the details of the amount received and the date of the receipt. Okay, so that is 36A. Then 37, 38, 39, have we discussed it? Yes. And then you have the 40. What is 40? It is regarding the accounting ratios in the form 3CD. And what are the accounting ratios over there? One, the total turnover of the assessee. Now that's not an accounting ratio, but yes, total turnover of the assessee. Then you have the gross profit to turnover, net profit to turnover, stock in trade to turnover, material consumed to finished goods produced, right? So these are the accounting ratios which are to be given in the form 3CD. What are the accounting ratios to be given in form 3CD? Right, there's the total turnover of the assessee, then the gross profit to turnover, net profit to turnover, stock in trade to turnover, and the material consumed to the finished goods produced, right? So that is which question over there? Question number 60, right? That is the question number 60, the accounting ratios in the form 3CD, right? Then 41, have we already studied that? Demand raised or refund issued under any tax laws other than the Income Tax Act or the Wealth Tax Act. And we've already seen the question number 61, 62, 63 for the same. Are you all with me? Right, now we have only these two clauses remaining over there, right? So if I again take a console view of the chart, helicopter view, this is how the chart is looking so far. Right, this is how the chart is looking so far. Right, and now we come to the two clauses which are left over there. Which are the two clauses which are left over there? The 42 and the 43. Whether the assessee is required to furnish a statement under form 61, 61A or the 61B, whether it has been furnished on or before the due date, and whether the assessee is required to file the CBCR. What is CBCR? The country by country report. Whether the assessee is required to file the country by country report under 286(2) of the Income Tax Act. Right, required to file the country by country report under 286(2) of the Income Tax Act. Right, so form 61, 61A and 61B, and then the country by country report, whether it is required to file, whether it has been filed on or before the due date. Okay, right, so now first let us have a look at this form 61, 61A and the 61B. Okay, so does that complete our entire chart? Right, does that complete our entire 44 clauses of the form 3CD over there? Right, does it complete all the 44 clauses over there? Right, and now coming further over here to the discussion of form 61, 61A and the 61B. Okay, I want to enter into a transaction with a person of 10 lakh rupees. Example, I want to enter into a transaction with a person of 10 lakh. Now, you know, if the transaction is of more than 2 lakh, then I require the PAN to be taken. Then I should take the PAN of the other person. I tell the other person, please give me your PAN. But that person says, I don't have a PAN. Right? That person says, I don't have a PAN. So the person who does not have a PAN gives me a declaration in form 60. So who am I? I am a receiver of form 60. Who am I? I am a receiver of form 60, and the receiver of form 60 has to file form 61. So I want to enter into a transaction with a person, but that person does not have a PAN. So that person gave me a declaration in form 60. So I am a recipient of form 60. So recipient of form 60 has to file the form 61. Are you understanding that? Right. Then 61A, when you enter into certain specified financial transactions, like, you know, above 10 lakh, the buyback of shares and all, when you enter into the specified financial transactions. And 61B is regarding the FATCA, that is the Foreign Account Tax Compliance Act, right? The Foreign Account Tax Compliance Act, right? The Foreign Account Tax Compliance Act, right? So whether the FATCA is applicable, and again whether the reporting has been done for the transactions accordingly, right? So the Foreign Account Tax Compliance Act, right? So form 61, 61A and 61B. Basically in all these forms, they are asking you the details of certain transaction. Which transactions ka details are they asking you? One, you've entered into a transaction with such a person who does not have a PAN. Then you've entered into specified financial transactions, or you've entered into the transactions where the foreign tax is also applicable. Where the foreign tax is also applicable. So they are asking you the details of such transactions. That is 61, 61A and the 61B. Right? So what does it say? You have the assessee where he is required to furnish form 61, 61A, 61B, whether it has been furnished on or before the due date. So whether it has, you know, just as we say, whether statutory dues have they been paid on or before the due date. Similarly over here, whether these forms have been submitted on or before the due date, right? So one we have is the 41. 41 was demand raised or refund issued, and then you have the 42. What is 42? Whether the assessee is required to furnish the statement in form 61, 61A and 61B. Yes or no? If no, then no further reporting required. If yes, then what does it say? Please furnish the income tax department reporting entity identification number. Then the type of form. What could be the form? 61, 61A or the 61B. Then the due date of furnishing, the date of furnishing. Then whether the form contains all the information about all details and transactions which are required to be reported. And if not, then the details of transactions which are not reported. right? Then the details of the transactions which are not reported, right? And then what is 43? 43 is regarding the CBCR. What is CBCR? The country by country report, right? Whether the assessee or its parent entity or its alternate reporting entity is liable to furnish the report. What is this report called as? The country by country report under section 286(2) of the Income Tax Act. Whether the assessee or the parent entity or the alternate reporting entity is required to furnish the report under section 286(2). So again, which is regarding your transfer pricing and so what does it say? If yes, then please furnish the detail. Whether the report has been furnished by whom? The assessee or the parent entity or the alternate reporting entity. Then what is the name of the parent entity, name of the alternate reporting entity if applicable, and the date of furnishing the report, right? And the date of furnishing the report. Are you understanding that? That is the clause 43. Whether the assessee or the parent entity or the alternate reporting entity, is it liable to furnish the report under 286(2). If yes, then the whether the report has been furnished, then the name of the parent entity, alternate reporting entity, and the date of furnishing the report. Okay, right. So what is 42? It is regarding the form 61, 61A and the 61B. Right. So question number 64. CA Nitesh, while carrying out the tax audit of PQR, observe that PQR has entered into specified financial transactions covered under 285BA of the Income Tax Act 1961. Okay, PQR Limited has furnished statement of the specified financial transactions in Form 61, 61A. Guide CA Nitesh with reporting requirements under clause 42 of Form 3CD. The management contends that tax auditor need not report if the transactions are not covered in the ambit of 269 ST. Right, so what does it say? With respect to Form 61 and then with respect to Form 61A. What does it say with respect to Form 61? The tax auditor should verify whether the taxpayer has entered into any transaction where the other party was required to quote the PAN. He should verify whether the taxpayer has obtained a declaration in Form 60 where the other party has not furnished the PAN. So have I entered into a transaction with a person who should have given me the PAN, but he does not have the PAN, so he gave me a declaration in Form 60. Wherever the taxpayer has received the declarations in the Form 60, the auditor should verify if the taxpayer has filed the Form 61, including the necessary particulars. Is it clear to everyone? Right. Then second one, with respect to Form 61A, the tax auditor should ascertain whether the taxpayer is required to report on any transactions under 285BA, that is the specified financial transaction, right? Read with the rule 114E. For yes, that it may be noted that the specified transactions are for issue of bonds, issue of shares, buyback of shares or by a listed company, etc. These transactions may not happen every year, and hence special attention should be given in the year when a company taxpayer issues any security or a listed company undertakes any buyback of the share. Right, and while verifying the same, the tax auditor should ensure that the provisions of Rule 114E3 have been properly considered and applied. Failure to do so may result in a certain transaction not being reported. It may be noted that the payment may be received for various transactions on different date, and hence this may not be covered under 269 ST, but will have to be reported under 285BA. So no, it is not exceeding that 20,000 or 2 lakh or something, but still it will come under the 285BA. Keeping in view of the above provisions, contentions of the management that tax auditor need not report is incorrect, and hence the tax auditor will have to report under 285BA. Right, and then what is the reporting requirement over there? Are you understanding that? Right, so that is our question number 64. Right, so what do we write over here? The question number 64. Right, question number 64. Okay, right, like for ethics, when we had completed with the chapter on ethics, I had made a concluding remark for that chapter. What concluding remark I had made for that chapter? That you should go through the RTP suggested. Given randomly a question of ethics is thrown in front of you, are you able to identify the clause part and the schedule? Because in our books, what is happening? Clause is given, question is given, clause is given, question is given. Now, as my concluding remark for the chapter of the the tax audit, what I would suggest to you is, that you have the institute study material, right? You have the institute study material in which it is a 108-page chapter. You understand, in which it is a 108-page chapter over there. And what they have done for each clause, like, if it is clause 8a, whether the assessee has opted for the taxation scheme, then they've given the detailed audit checklist for the practical understanding over there, right? Then 10a is regarding the nature of business or profession. Then again, the audit checklist has been given over there for the practical understanding. Then 11, again, they've given the audit checklist for the practical understanding, right? So any clause you want to gain the more understanding, after each clause, sub-clause, they've given over there the audit checklist for the practical understanding, right? There are some, so still I have taken 63, 64 questions. I've tried to cover maximum of it, but anything you do is anyways not enough, and it always asks for more and more of you. So no other chapter, but specifically I'm telling you for the tax audit chapter, whenever time permits you, you can just go to ICI Board of Studies knowledge portal, download this chapter from there, and in this chapter you check for each clause what is the audit checklist for the practical understanding. Are you understanding that? So what you do, you keep your book in front of you. You already know the questions which have come in the exam, and what additionally you can also see the audit checklist for the practical understanding, right? So I'm telling it to you very, in a very clear manner. Okay, this is what additionally is suggested to be done. So write down, also study the audit checklist from the practical understanding from the study material of the ICAI. Also go for each clause, go through the audit checklist for the practical understanding of the ICAI, right? For each clause, they have given the audit checklist for the practical understanding. Are you understanding that? That is why their chapter has become so big over there, right? That is why it is running into pages and pages over there, right? The audit checklist for the practical understanding. See over here, right? For each of them, they've given. So this audit checklist is nothing but our audit procedures. And this audit checklist over here is nothing but our audit procedures. Okay, right? So we are on a countdown. Earlier we said chapter number 1 is complete, chapter number 2 is complete. Now we are saying how many chapters are remaining. We are on the reversal. We are on the opposite side of the counting now. And now that we have taken a lot of patience, it requires lot of patience to study the chapter of the fiscal laws. Right now being with me, you are thinking, oh, what tax audit, so much of clauses, so many questions. Had you opened the book on your own, no, you would have left the chapter in option only. You understand? You would not have had the patience. Nobody would have sat on your head and made you study or look into the content of that chapter over there. But yes, again, we've completed one huge chapter. These are like the big chapters. But till now, still the big chapters are not over. We still have two big chapters on our way. That is the audit of the banks and the audit of the insurance company. Then we can say that, like that the big jumbo chapters, those are over. What is then remaining is the small chapters. But then you will say small ka definition is also very big. That you see that even there is a lot of content in those chapters also. Right. So if I want to start with our discussion regarding the bank audit, right? The audit of the banks. Again, how many of you have never done a bank audit? Never, never. Okay. How many of you have never gone to a bank? ATM? Everybody is gone, okay, but not done the bank audit over there. Okay, right. What is the weightage of this particular chapter in the exam? Again, 1 to 2 questions are asked in the exams. Okay, and then this is the website of the ICICI Bank. What does it say? Personal. Right, then the business, corporate, gift city, oh my God, right, then the account, savings account, deposits, fixed deposit, recurring deposit, then the forex services, student services, right, then the ways to bank, internet banking, other channel, WhatsApp, Pocket, iPal, Alexa, Google Home, mobile banking, calculator, home loan calculator, personal loan calculator, find an ATM or a branch, or interact and blocks, right? So these are the various services. Apply for Coral credit card, they've written over there, digital banking, and we take your security seriously, right? Greater offers for the great experiences, and they have these different offers which have been given over there. Okay, right? So that is one very common private bank, which is the ICICI Bank. Then we also have this Bandhan Bank, which is for the small units over there. Welcome to the circle of the success and happiness. No matter where you enter the circle, we are here for you and explore our products, right? This bank is for everyone, right? So it says 2.77 crore customers and counting, and 5646 banking outlets, and 17 plus lakh participants of the CSR program. And then again, they have the details of the savings account, home loan, the gold loan, and all of those which can be taken, right? Then we also have a foreign bank over here called as the Deutsche Bank, right? So Deutsche Bank, again, it talks about the private clients, right? The world outlook, right? And again, the client logins, the media, career, and so, right? Then again, a very popular private sector bank is the HDFC Bank, right? So again, HDFC Bank, what does it say? Account, saving account, salary account, current account, rural account, PPF account, Sukanya Samriddhi account, then deposits, right? Fixed deposit, non-withdrawal deposit, fixed deposit interest rate, recurring deposits, right? Then they also talk about invest in mutual funds, investment by HDFC Security, equity, IPO application through the ASBA, IPO application, then recommended portfolio, HDFC Bank research reports, right? Then also the insurance services being provided, protect life and grow wealth, right? Secure children's future, deposits, national pension system, and the gold monetization scheme. Then what are the different types of the loans given by them? So personal loan, paperless personal loan, right? The loans and the paperless personal loans and all of them given over there, right? Where they talk about the different loans being given, right? They talk about the borrow, right? So the different loan on credit card, gold loan, loan against security, loan against rental receivable, loan against property, loan against the car, right? Business loan, new car loan, super bike loan, educational loan, salary plus, and so. And then they also have these different types of the insurance covers over there, and the different smart buy options, right? So that's HDFC. Then obviously the banker to all the banks is the Reserve Bank of India, right? So you have the RBI guidelines, right, which are required to be complied with. The RBI guidelines with respect to the asset classification, income recognition, and the provisioning, right? Then you have the Airtel Payment Bank, right? Nowadays we have no the Paytm payment and the Airtel Payment Bank only, where they only facilitate the payment, right? You can say just add money, send money, prepaid, postpaid, FASTag, DTH, electricity bill, and some other more services over there, right? So gas, landline, water, get loan, data card, offers, insurance, and that. So only for the purpose of the payment, no deposit and no fixed deposit or no any other, just for the purpose of making the payment over there, right? So that's the Airtel Payment Bank. Then you have another bank, which is the South Indian Bank, right? So again, it says experience the next generation banking, so personal banking, then the priority banking, NRI banking, right? So again, then the business banking over there, right? The domestic finance, international finance, VAT, yes, the SIB, API banking, and then you also have the online banking, right? Then you have the Cosmos Cooperative Bank. So you have a foreign bank, you have a small bank, right? Then you also have the Cosmos Cooperative Bank over there. And again, you have the provisions over here regarding this, all the details of the services provided by this particular bank, right? So what are the services? They also have the locker services, no, the bank, right? Then anywhere banking, demat account, foreign exchange, insurance, PAN card service, right? Then what are the resources? Safety, right? Then the public, legal, right? Do not call registration, website usage term, disclaimer, right? Then public policy, that is the public, so AGM, annual reports of Cosmos Cooperative Bank, right? And then obviously apart from that, we also need to look into the, right, a few of the annual reports of the bank. And if you look at State Bank of India, the annual report, the audit report, the independent auditor's report is addressed to the President of India, right? It is addressed to the President of India. And again, over here we have the opinion and the basis for opinion paragraph. What does it say? Opinion and the basis for opinion paragraph. How many branches have been audited by the branch auditor? 8,557 Indian branches have been audited by the respective statutory branch auditors, and 34 branches have been audited by the respective local auditors in that other country over there, right? Then they have so many of the key audit matters, right? So many of the points coming in the key audit matter. Then responsibilities of the management, responsibilities of the auditor, other matter. Then what does it say? We did not audit the financial statements of 8,591 branches. And so many branches were not audited by the SCA. Who is SCA? The statutory central auditor. These were audited by the other auditors. Like you remember in case of Reliance Industries, 299 subsidiaries were audited by another auditor. Here it says 8,000 branches have been audited by the other auditors. And our report is based solely on the report of such branch auditors. And our opinion is not modified in respect of this matter. And now, will you only report as per 143.1 and 143.3? No, you also need to do the reporting as per the Banking Regulation Act, right? So what we will do, we will look into the provisions of the Banking Regulation Act, and then after that we can see, what is the requirement of the audit report and all over there. Like over here we have the points regarding the audit report. So once we see the points over here regarding the audit report, then we can see that what are the points which are there in the SBI report, right? So after the break, we begin with the chapter of the bank audit. Okay.